is showing like this. So there is assuming another end is an enter now, will continue. So where it will stop. So you have to re-enter back.
Let me okay, that's continue. The line chart. So let's go to 4 hours. Now on 4 hours now, GBP USD. On 4 hours, remember what we saw on the daily? We saw a W pattern. Let's quickly go to the daily and show that again. We saw a W pattern around here. We marked out this support where the market came to tap into. We had another support below, which was for the whole range. So then we check the line chart to confirm this. Then we notice this our W pattern over here, and we drew out this neckline saying when the market comes here, we buy the market. When the market comes to this our neckline, we enter for a buy. Now let's go to 4 hours. I switch back to my candle chart. We go to 4 hours. Now this is it on 4 hours. Now this is what we have on 4 hours. First thing I want to check now on 4 hours. Now I want to also check. Yes, we know the structure is bullish, but let's also check how the structure is playing out currently on the 4 hour chart. So we start from here. Let's just mark this out from here. Then we had a break. Now I can also see on the 4 hours, this is also forming a W pattern on the 4 hours, and this is our neckline. Same neckline we had on the daily. Same area we had our neckline on the daily. It's still the same area where we have our neckline here on the 4 hours. So you are seeing that both the daily and both the 4 hours, they are telling us the same thing, also giving us the same entry to take our trade. So on the daily we saw our neckline here, on the 4 hours we are seeing our neckline here. So now my focus would be that since I'm buying into this market, I'll look for my buys around this area. Is either I even take my buy from this neckline, or I just look for the support around this neckline or any support on this neckline. And we have the support over here. We have this support here. So I mark out this support. I mark out this support like this. I place my entry on top of it and stop loss below. Stop loss below, my entry above. And I target about 1:3. Okay. Could decide to target this very top like this, is your choice. But since I've seen that on the higher time frame this market is ranging, I wouldn't want to just overdo it. So let's just leave it like this. I have my entry here on this neckline. I have my take profit above this level, my stop loss below. This is my support level like this. But let's say you don't trade 4 hours because of how long the trade will take to get to your entry and your take profit. Now you want to move to 1 hour. We want to move to 1 hour. So let's go to 1 hour. Now this is it on 1 hour. Still have the same join we had from daily and from 4 hours on the 1 hour chart. So let's clear out that join. Now look at the structure also on 1 hour. Now we have this movement. Let's start from here. Okay. We have this movement from 1 hour. Now if you're a 1 hour trader, you can't just open your 1 hour chart and start trading there. You need to check what the higher time frame is also giving you. But let's say we want to just focus on this 1 hour chart. The mistake we'll probably be making is that where this market is currently, it could be a retracement area for the daily or for 4 hours. So probably now you might want to buy the market from, let's say, the support here like this. I want to buy the market here. But you would now see that you bought this market and the market moved below it, got to probably this zone, then starts to push back up. Now the market still bought, but it used a different area or a different zone rather to buy. Your analysis was right that the market is going to buy, but your entry level was wrong. So you need to check higher time frames also when you want to take a trade. Don't just be stuck at one time frame. So what we are seeing on 1 hour now, we are seeing a support level here, we are seeing a support level here, we are still seeing another support level here. Let me circle them out. There's one here, there's one here, and there's one around here like this. So which of this level now would we now use to take or to mark out our entry? Now I'm going to go back to the 4 hour charts. Now this is the 4 hour chart. Now let's look at the 4 hour chart. Now looking at this now, we have this move from here to here. And if you notice now, you will notice the supports on these 4 hours. Market has filled in into most of the supports. Starting from here, market came back, came back to this. But this support over here is unfilled. So I will mark it out. I mark out this support. If you still check, it's still at the same area where we had that overlap for that our neckline from the, yes, we also had it from 4 hours, but let me just mark this daily neckline. You can see that this zone now that we are marking out, the neckline is overlapping the zone. That means the neckline is on the same zone as what we marked on the 4 hours. That's the daily neckline. So we can freely enter our market from this area. But because we are not using 4 hours, now let's check 1 hour and see how it's looking at on 1 hour. Now this is it on 1 hour now. This is the zone, the area on 1 hour. So we'll be looking to enter from around here on the 1 hour chart. We'll be looking to enter from around here on the 1 hour. Now you can now come to 1 hour and you modify your entry to your taste, your stop loss and everything. This might be too big for you depending on how many pips you use for your stop loss as a trader. This might be too big for you. So you come to 1 hour and you also have your trading style. What I'm doing here is just purely support and resistance. I'm not doing anything extra here, just support and resistance. But you might have your own different approach for this market that would make you remodify this your entry. I know some traders will want to do it like this, put it exactly at where we have that neckline, then bring down their entry to something like this, exactly at the neckline on the daily time frame. Then their stop loss just slightly below this. We target exactly this high. So something like this is not bad. Almost 4 risk to reward ratio. So that's also not bad. So this is what we'll be looking at for on GBP USD. This is what we'll be keeping our eyes out for GBP USD. So we'd like to see if probably tomorrow market would have pushed down, but the thing is tomorrow is Friday, might get to this point then activate, but most traders don't like to leave their trade over for the weekend. But let's just see how the market moves, then we'll know if we will follow up with the trade or if we will follow up with it the following week. So this is it on GBP USD. Now let's also check Euro USD. So we start from the daily also, yeah. So this is Euro USD on the daily. We are seeing a change here in the structure. Let me mark it out. Starting from here. The market shifted, changed structure here, and is pushing down. So they expect a pushback up, then down to continue. So that's what we are seeing here on the daily time frame from Euro USD. That's what we are seeing on Euro USD. Now we want to know where this market is likely coming back into before before it sells properly. From what I'm seeing here, this market is still going to push up a bit before it actually sells on this Euro USD. I'm still going to have a bit of a buy before the sell continues. So let's check 4 hours. Let's see what's happening in 4 hours. Now look at this for 4 hours now. Now look at this from 4 hours now. The market is currently at a resistance zone. It's currently at a resistance zone here on 4 hours. Now since the market has gone this far without us, and we can't just enter this market here for a buy. Can't just enter it for a buy. Remember on the daily we were saying that the market is still going to push further up before it continues to push down. But from what we are seeing here now, the market is actually reacting from a resistance level. That doesn't mean we should just jump into a sell. But let's actually see if selling from this zone will be okay. Now you look at this market now when it tapped into this zone. You will notice something. You notice that when it tapped into it, the market it formed a wick. And if you are conversant with candlestick, you will know that wick means wick is for rejection. Wick shows that market got to an area, then price pushed it back down. So that's rejection. So market has pushed into this area, it has pushed back down because it's a resistance. It's resisting the price from going above. Now the next candle came again, got into that resistance, pushed down, and now we could see that this market is pushing down on this 4 hours. And remember the structure we saw on this market on the higher time frame is a sell. So even if we want to buy this market, we are taking a huge risk. We are doing a counter trend. But let's go back quickly to the daily. Now this is what we saw on daily. This is what we saw on daily. Let me also mark this out. This is what is happening on daily. But why I'm looking at this market, that this market is still going to push a bit to the upside before it drops, is because of this. If you check the range now from, let's say, from this zone to this zone, let me use this, so somewhere around here like this. Check the range, the market is still at a discount level. So I'm expecting the market to push really far above before it pushes down. But we can't forget the fact that this market is on a downtrend. So you could decide that it's not going to follow the price rule of, okay, it's at a discount, so it's going to buy first and all those other stuff, because it's on a downtrend. Also, looking at this current range from here to this point, market hasn't gotten into the premium level yet, where we would say, okay, this is the selling point. So we want the market to get into, at least get into this level here, from this range to this range, before we could look for any sells here. So what I'm going to do on this market is this. Now, knowing that the market is giving me this signal that is going to still push further up before it sells, and is also reacting from a resistance currently, I'm going to play it very careful. Let's go to 1 hour. Now this is the zone we drew on daily. Let me go back to 4 hours and quickly withdraw that zone. Yeah, we had a resistance here. So back to 1 hour, we could even go lower than 1 hour. Let's just see. So this is us now on 1 hour now. This is what I'll be looking out for this market. I'll have to be careful with this market, not to take the wrong trade. So one thing I'm going to look out for is this. If this market comes, probably might not, but if it comes to this area here and I notice it breaks below this zone, then on the retracement I'm going to take my sell and push it back down. This is on the 1 hour. So if this market breaks below this zone, let me use a line to mark it out. Market comes and break below this zone like this, I'm going to take a sell from the retracement, then push the market back down. But if this market fails to do that and it proceeds to push above this resistance, you know, when market breaks a resistance, that means resistance has turned to support. And if you are using support, that means you are looking for buys. So if this market breaks above this our resistance level, I'm going to fall back to 4 hours. I'm going to fall back to 4 hours and try to look for my, I'm still going to use the 1 hour, I'm going to mix both. I'm going to fall back to 4 hours. If it breaks above here, then try to mark out my level where I'm expecting to retrace into. And also remember the zone we marked on the daily. Let me use like a circle to mark it out. So remember, quickly draw my Fibonacci. So we had from this area here like this. So back to 4 hours. So if I am buying into this market now, I could buy to anywhere around here, then I get out of the market. I wouldn't even want to push it that far because the market is a sell. So if I want to even buy the market, I will have to be very, very careful. I wouldn't want to push it this far. Probably, let's say it breaks above this high here, then it comes down, I take my buy. I could just target this new high it used to break above before coming down. I'll just target something like that, or target this high here, which is this target something like this. Then after that, I'm done with it. I'm done. I'm not going to make sure that the market gets to this very point I saw on the daily that is going to use to sell, because this market is on a downtrend. So the buys, if you are buying this market, we are taking a bigger risk. So since we are taking a bigger risk, we don't have to set our take profit at the very point where we are predicting that okay, the sale is going to start from. Since we know the market is bearish and we are going bullish on the market, we have to be not greedy about it, and you have to play it smart. So I will target something like this, or I will target the high that the market created after breaking this resistance. So that would be my level for this Euro USD. So for now, let's just focus on this area here. Let's see what the market will do. So let me take it back to 1 hour. We focus on this area. Let's see what the market will do. If it's going to break below this support, which is going to show that it wants to sell, or break above the resistance, which shows that it wants to buy. So from there, we'll know what we'll now do next and how to now find our zone. Currently now, we don't have our entry zone on Euro USD. Unlike GBP USD, where we have our zone for our entry. On Euro USD currently now, we don't have our entry zone. So we are just waiting for the market to give us a clear guide on where it's going, to give us a better direction. Then from there, we push on with the market and follow it through. All right, so let's check. Okay, now let's check one more market, GBP JPY. Let's check GBP JPY. Start from the daily again. So this is GBP JPY giving us this structure. You can tell is going up from what we are seeing here. We can tell it's going up. Now this is a high a lot of traders will want to target, especially the swing traders. We are on a daily time frame, so swing traders will be looking to buy up to this point here. So we the day traders, or the day traders now, will be looking to get into a buy from here. We will not target this external high because it's too far for us. So let's check 4 hours. Now this is us now on 4 hours. Let's mark out our range. Start from the low to the high. So from anything around here, I could look for my entry. So I'm not really seeing any entry here. So let me get to 1 hour. I think there's an entry here. But let me confirm from 1 hour. Okay, okay. This is an entry on 1 hour. It's an entry on 1 hour. So we could look into this entry level for GBP JPY on 1 hour. Target something like this. Place my long position. Stop loss below this level. You choose to make your stop loss cover this whole level, is your choice. Let's just do something like this. If you want to target that very high, depending on the type of trader you are, still your choice. But let's just target the high we can see on our screen here. So this would be what we would have on GBP JPY. All the analysis we've done, GBP USD, Euro USD, GBP JPY, is just the same strategy. We just use market structure, top and down analysis, support and resistance, and the Fibonacci tool. Those were the tools, or those were the things we used to make up these three analysis we've given out to you guys. So this will be our entry, this will be our target based on what we've seen from the 4 hours. Now on 4 hours now we didn't see any entry yet, so we had to dig deep into 1 hour to get this our support entry from here. So this is it, a 4 risk to reward trade, which is good. You invest like $10 into it to get about 47, because this is 4.71. Get about 47 from it if it goes your way. So that will be it for today. We'll be seeing you guys again on Saturday, 11 a.m. for a physical class and online also. So thank you all for joining.